Hello and welcome to another edition of the Technical Market Update. What we have in front of us is a the daily chart of the euro, and what's happening is in the euro is that the this area was resistance near this 110.50 area. The market came down, punched through resistance, came down, bounced off of uh, resistance. So prior resistance then becomes future support. That's what normally happens. And then the market is continuing to rally. The next area of significant resistance in the euro is this 115. These highs up here at 115.33. If the market does punch above that level, that it would be fairly bullish for the euro currency, or the euro versus the US dollar. Taking a look at the 15-minute chart coming into the day, the market has gone above the daily R2, so that signifies some amount of strength. When the market blows through the projected resistance numbers for the day, that is quite bullish. Now we're seeing US dollars weakness, across the different currency pairs. We see the Australian dollar, the market is rallying pretty nicely. It has stalled out at the weekly resistance number, the weekly R1, that is currently holding the market, and we're seeing sellers come in at this level. We should also see resistance at the 81, this previous high here, which is at the 80.75 level. This is here. So we have weekly resistance at 80.18, a prior high at 80.75, and also just above that we have our monthly R1 at 81.40. So there are some areas of resistance coming up with the Australian dollar here. Looking at the British pound, it's rallying, not as strongly as the Australian dollar this morning, but the resistance on the pound is also at the 155.52 level. Now, tomorrow I rarely speak about fundamental news because I believe that the fundamental news may shake the market, but it doesn't affect the longer term trends. But tomorrow there is a British election, and it could definitely affect the direction of where the pound goes. So for you folks that are in positions with the British pound and are trading the British pound, we will keep an eye on the election results to see which way the market reacts, whether the Conservatives win or the Labour Party wins. Now, looking on our chart of interest, we have been speaking about this for the last couple of months, couple of weeks. It hasn't been that long. It's this triangle in the British pound Australian dollar, and the market is looking like it's showing its hand here. And normally in triangles, we see that the market it's a continuation pattern where the market will enter the triangle and then break in the direction with which it came. So if it's in an uptrend like this, the triangle normally breaks to the upside, but there is a chance that it will break to the downside. And over the last couple of weeks, I'm saying that we are positioning our portfolio to the upside because that was the direction of the trend. But I did say that there's a chance that this market could break to the downside, and that's why you put in your risk management stop losses. And I just want to highlight the fact here that we point out winning situations and losing situations. Now, this trade hasn't been stopped out just yet, But this is an example that when a trade is not going in your way, it's very important for you to have proper risk management, because when you're trading, there will be losing trades. Good traders are able to take themselves up from the losing trades and continue trading. And bad traders make losses become even more losses and more losses and more losses, and eventually their account is down 50%, 60%, and that is unacceptable. Okay, so we're going to watch this market to see if this is a clean break. Now what could happen is that we're up on support areas. Sometimes these triangles can enter. They may break the area of support, and then the market could enter a channel here. So we want to see definitely this market close below the swing low of 90.29. We want to see the market close below 90.29 and then possibly close below this 88 level. That will definitely signify that the market, this triangle has been broken out. Okay, so that's a British pound Australian dollar pair. Another market of great interest. The currency crosses always have good moves coming, and that's Australian dollar, New Zealand dollar, where we see the market is rallying pretty significantly, and I am expecting that we could be entering a time where we may see an opportunity for a longer term short opportunity in this market. The market is now coming up on the 50% retracement level, all the way from this high, the swing high that was made in October, November of last year, to the swing low of April, and the 50% Fibonacci retracement is at 106.53. We could see a test of 106.53 and also 108.06 in the Australian dollar, New Zealand. So in these areas, we'll be looking to see if we get signs that sellers are coming in, and this could present a perfect opportunity for a short. But remember, we have to see evidence that the sellers are coming in first. We are just not going to enter the market when it's rallying like this. You want to see sellers coming in and evidence to see if the market will continue lower. Okay, so remember, if you want these signals trading automatically, because what's happening now in the market is that the market is beginning to show its hand as to which direction it may be going, and we want to capitalize on these movements. So if you want these signals in your account, you can click on the link below, and we'll see you tomorrow. Maybe we'll have a result in the UK election by tomorrow. And also remember, the non-farm payroll report is this coming Friday also. So we have some exciting times ahead of us in the market. So this is Beyond, and thank you for listening.